You need to conduct yourself in a way that's, oh, like, I treated my investors, I treated my employees well. I tried to deliver a good outcome, even if it wasn't the one we all wanted. I behaved in a way that shows that I'm a good actor in the ecosystem.
Welcome to Brave. Learn from Southeast Asia's best tech leaders. Build the future, learn from our past, and stay human in between. No BS on success. I'm Jeremy Au, venture capitalist, serial founder, Harvard MBA, science fiction nerd, and dad of 2 daughters. Every week, we debate startup news, interview changemakers, answer listener questions, and share personal insights. Join our movement of over 40,000 members and get transcripts, resources, and community at www.bravesea.com. Stay well and stay brave.
Hey, Shiyan.
Whoa, that's like way too much when you're this close to me.
Too much?
It's less intimidating when we're like, we have the separation of the screen.
Yeah, I know, the high energy opening.
Yeah,
This is our first time recording in person together.
and it might be our last.
It's like, no, this is too much. I need more distance. I need kilometers of distance.
Away a little bit.
2025, we took a little bit break, and now we get to chat a little bit about what's been going on in the ecosystem.
The news doesn't stop, Jeremy.
Oh, yeah. We can go for holiday, but news doesn't stop. In the last episode that we had, we did 5 predictions and 5 wishes for the Southeast Asia ecosystem.
And congratulations, I think Santa was listening as we were making our Christmas wishes.
To be exact, I wished for better accounting. I didn't wish for
More fraud?
more fraud to be happening in Southeast Asia, but you can't bet against more fraud in Southeast Asia.
Oh,
That's a losing bet.
That's so depressing.
It's a very shirt. It's, you can't bet against Southeast Asia fraud. Okay, it was alleged. It's alleged, right? So it's allegations. Obviously, it's quite serious. So the big news that has come up is that eFishery, their founders, have been suspended by the board of directors, and it's very fuzzy in terms of the details. Obviously, it is a claim of embezzlement, which is quite serious because it's a very serious allegation, right? And this allegation is actually quite provable, right? Did you see the transfers, etc.? There must be some substance to the whole set of parameters, but it's very unclear to me because there's so little public detail about what's going on. Yeah.
Yeah, but I think what's worrying is that this is a pretty late stage company, at least from its financing history. It has a host of really reputable investors on board who presumably conducted deep diligence. I think a company of this stage also generally has audited financials, right? This isn't like some 6-month-old startup that's running the whole business on QuickBooks. So I think that's what's also a little bit worrisome. And it's just not a good look, right? Let's be honest. It's just not a good look for the ecosystem. And yeah, a little bit disappointing.
Yeah. So I think I'm of 2 minds. I think first of all, my wish was that there was better accounting. And because with good accounting, the board wouldn't have made this allegation against the founders. And also the founders caught it sooner and cleaned it up earlier. Or the founders also would not be in this position of having been suspended and while we wait for this set of legal processes to work out. So better accounting would have made life easier for both the founders and for the board of directors. But let's talk a little bit about the history of eFishery, right? So I think not everybody knows what eFishery is. So eFishery, I think the thesis behind it is that aquaculture or fish farming in Indonesia is very fragmented, is very inefficient, and these fish farmers, for example, aren't able to bargain for supplies at a good rate. They're not able to improve the productivity of their fish farms using automated fish feeders or water testing and so forth. And also they're not able to maximize the value of their harvest by trading it out. And so eFishery does this end-to-end where they support the farmers, increase productivity, help them trade, and that's supposed to give them better returns for the farmers, and then eFishery gets a stake of it. And I think eFishery has been the darling of Indonesia agritech over the past
10 years, I think.
I would say so.
15, right? I think it was.
Yeah. And I think over the past 5 years, their success in terms of achieving their Series B, Series C, Series D last year inspired so many Indonesian agri-tech companies to be founders, but also created a lot of interest amongst investors who suddenly are investing in agri-tech deals. And it was like eFishery for chicken, eFishery for rice, there's a lot of companies that have resisted. But the core thesis is, what is a full stack end-to-end of the whole supply chain from the start, from inputs to farming, productivity to outputs to trading. How can you manage that in a more controlled fashion? What do you think about that original thesis for the Indonesia market?
Everything can make sense at the right price.
Yeah.
I think all the things that you said in the original thesis, like, oh, if we could make farmers more productive,
Yeah.
wouldn't that be great? And shouldn't we be rewarded for a piece of that?
Yeah.
And oh, there's like different levers for making them more productive, right? We can lower COGS through better negotiation on the feed side, right? We can improve yield through more modern management practices, and we can improve pricing because we'll get more aggregate power, and we can. So all those things are like non-crazy assertions, right?
Yeah.
Then I think the question is, what should those things be valued at, right? What are we including in the revenue? And I think we actually did an episode on this last year around the time of the big round.
Yeah.
And you had mentioned, I think some baked in that revenue number is not just like software and IoT and all these sort of more recurring things, but it's also just like low margin fish feed revenue, which you probably don't want to apply the same multiple to.
Yeah.
And again, right, what's the right price for this kind of business? And were we thinking about it, and how much more could it grow? I think those things are things to like think about.
Yeah. And that's entirely right, because the quality of revenue is different. And I think that's what trips up a lot of Western trained investors, because a SaaS company to B2B, SaaS product 1, SaaS product 2, SaaS product 3, they actually have the same finance and revenue model. But I think the tricky part is that for Southeast Asia, a lot of these conglomerate type of end-to-end, they actually have a fish feed revenue, the logistics business, and then they have the trading. And then each of them actually has their own multiple. Like trading should be similar to Olam, because they also do trading, and then logistics will be a different thing. And so I think, but I think what happens is that a lot of people take the whole consolidated revenue and they put a technology SaaS multiple, which also at the peak was crazy. And so you have a double craziness, right? Which is Southeast Asia, you're equating agritech or logistics or some sort of a very brick and mortar business revenue, which is low quality revenue and low recurring revenue. And then you make it seem like B2B SaaS. And then at B2B SaaS, you add the peak valuation multiple, and there's a double error that's already happening on a fundamental basis, which is, I think, the concern already at the Series D was, I think a lot of investors were like scratching their head. Khazanah backed out of initially the lead investors for Series D, and they backed out.
Yes. But there's still another Malaysian sovereign, right? Kuop is in.
Oh, yeah. So I think it's interesting to see. And so I think the question for my head is, which I still don't know, because again, these are allegations, I still don't know the facts on my side, but is it like, because the financial performance underperforming since the past 2 years, the multiples have dropped, the quality of revenue and the revenues have been disaggregated, and there's some sort of come to Jesus moment where everyone's like grappling with that? Or is there like more serious material fraud or embezzlement, which is what the board is claiming, which is much more different, right?
Yeah, I think if it were just pure performance, it feels like the announcement would be different, right?
Yeah.
We're making cuts.
Yeah.
We're slimming down our product portfolio. We're concentrating on our core, things like that. I don't think it'd be like, we've suspended the founders because of embezzlement. That just feels like a much more serious charge, and I think more worrying, right? Because at the end of the day, like, what makes startups work is there is an element of trust to it.
Yeah.
Right? Which is that somebody starts a business and at the beginning there's nothing, right? And you have to be like, hey, I believe you. You can go make something of it. And over time, you deliver against the plan or the vision, and people are like, oh, it seems like it's working. Like, we'll fund the next leg of growth, and so on and so forth. But these things like destroy trust, and it sends a chill over the ecosystem where then you're like, I can't trust anything. Like, I have to, and I just think it's just terrible. It's just terrible for the ecosystem. It makes me profoundly sad.
We had Zilingo, which is actually a lot of similarities to this so far, which is a full stack helping textile makers do all of it, materials, efficiency, productivity, trading. So it's similar end to end. And also, I think, strong Southeast Asia roots and operations. So I think that nightmare happened several years ago. And now we have another one. So I think people could say that was a one-time thing. And then also, I think you made an argument that some of the smaller cases of fraud that we've discussed in prior episodes were one-off emerging market items that were caught, maybe relatively smaller. But this is probably as large as Zilingo in terms of the valuation, and very late caught, or at least the allegations are coming in very late. So I think it's going to have a huge chilling effect on all growth investors in Southeast Asian companies.
Yeah, it's not great.
Yeah.
But some people made money on the deal.
They did. We were discussing that there were 3 people that were able to exit their positions in the last Series D. Northstar and
Sui Ling from Wavemaker.
yeah, she was an operating partner. And it was interesting because I think all 3 of them actually showed different approaches to their investment style. I think if you think about it, Northstar came in early in terms of, not as early as a Southeast Asia growth investor would be. And then when they sold a position that covered their original investment amount, all this data comes from Industry Asia, obviously. I think the second was that Ideasource came in the earliest, right? Yeah, with an angel check. And then they exited like a large chunk of the position, but not the entire position. But they were able to realize about maybe 40x MOIC over almost 10 years, 10 years. And then Sui Ling Cheah bought secondaries in 2019, and then she sold in 2023, 2024. And then she also got about a 40x return, but she exited her whole position, which makes her the best performing fund manager in Southeast Asia. because Ideasource did 40x, but they held for 9 years, right? And then she got 40x as well, but she did it in 5 years.
Yeah.
Yeah.
Congrats, Sui.
But yeah, it's interesting. Now I think if anyone is on the cap table of her and she exits, everyone's going to be like, it's time for me to take some money off the table. What's your thought about taking money off the table, especially in the context of Southeast Asia?
I think a lot of it depends on who you are, right? So as an angel, right, your LP is you, right? And so I think there's what is your hurdle and what are you underwriting for? And as an angel, you could be like, hey, 10x feels pretty great, or 3x feels pretty great.
Yeah.
And as an angel, you're also managing your own personal liquidity, right? Which is basically, hey, I could get, let's say, 3x in a year. That feels pretty good. And then I can take it and recycle back into other investments. If you're a venture investor, you have a 10-year fund, you get 3x in a year, your LPs will be like, what are you doing, man? That's not what I paid you to do. So I think a lot of it depends on who you are as an investor and what your hurdle rate is. I think for a lot of angels who were those people who made initial checks on the founder and bet early, it is perfectly rational and reasonable once like the major investors come in to say, hey, I've done my part and I'm going to take the money off the table. And then there's always this question, do I take it all off? Or do I let some ride? And do I cover my cost? Do I more than cover my cost and let the less ride? And again, that's given the company's current valuation and what you know about the progress. Do you think that is fairly valued? Is that aggressive? Hey, they're going to take some time to grow into that. Is it undervalued? Hey, I actually think there's way more here that people are not seeing. I think that really influences how much to take off the table or not.
Yeah.
And so it's a constant debate with fund managers, right? And I think some people have religion on it. Winner, hold on.
Yeah.
Other people are like, hey, we re-underwrite it every time. Like, we have to ask ourselves, if we're not a buyer at this price, are we a seller?
Yeah.
So I think it's like an interesting philosophical debate for folks. But I think in general, as a fund manager, people like it when you give money back to them.
Yeah.
So there's also this psychological impact of maybe I'm going to lose a little bit of upside, but I'm giving DPI back to my LPs and they can come and turn around and put it into my next fund.
Yeah.
And I'm willing to sacrifice a little bit of upside to have that forward momentum. And then there's other people who are like, I have no trouble raising my next fund. I'm just going to sit and hold. My LPs will thank me later. So I think there's so many different considerations in terms of like how people think about when to exit.
So there are actually 4 types of investors that we saw from this process, right? I think the investors who kept and held on for the ride, those who sold enough to cover their initial investment check. There were those who sold partially so that they realized some return, and there were those who cashed out entirely. Sui Ling, so she cashed out entirely. Of course, like I said, also these are also different investor types as well, right? So Northstar is a reputable, straightforward, legit, but large. And so them selling it actually creates a large signal to the market that if they sold the entire stake, I think it will cause a lot of loss of confidence for the new investors coming in. But on the other end of the scale, Sui Ling Cheah, who is a small individual investor with a small quantum selling an entire stake, because of those liquidity reasons, perhaps, would be very understandable and would not create a negative signal for her to cash out. So I think it's an interesting dynamic there. I think it really makes me wonder to myself, what are the key takeaways here for the ecosystem?
I think as a founder, as a human being, don't cheat lah. I feel like it's just so upsetting. I think you're trying to build a business and you're like ruining things for everybody else. It will get found out in the end, right? Like it's gonna be there. I think there's always a little bit of messiness when people get started. So I think people have some understanding of, oh, okay, maybe your rev rec was not like super perfect at the beginning because you were trying to figure things out. I think over time, like by the time you get to Series A, you should have a proper head of finance. You should start putting in place some of these like cleanliness and hygiene factors. Definitely, if you are anyone who is like thinking about getting ready for IPO, like all this stuff has got to be buttoned up. Like you're not gonna go out with a reputable underwriter
Right.
with this kind of situation. And so think about what your end game is here, right? Even if you're just purely self-interested, in the long run, you really should be trying to build a clean ship.
Yeah.
I think the one thing we didn't find in the news was like, did the founders take any money off the table?
Unclear. I'm sure as the details check out, I'm sure some of those details will come out. I think what I think about actually is that there were some micro signals. I think the CFO
Left.
left. So they joined and then left by eFishery. And then I think it's always a signal. I think that happened for Zilingo as well when the CFO left for Zilingo. For him, Zilingo is interesting because he came from a very reputable bank and then he came in and then he left very quickly within a year. So I think for investors, you always have to be aware that if a CFO or senior executive is leaving, it's really important to an, I think, strong exit interview. Just to be like, and look, people can leave all the time. Right? They can be tired,
Chemistry.
so there's all kinds of reasons why a senior executive leaves. But I think it's really incumbent on the board to really make sure that exit interview is done, because a lot of exiting executives, they're covered by confidentiality agreements. They don't want to be a whistleblower because there's no whistleblower protection in Southeast Asia. So I think it's a bad situation to be in for a departing executive who is departing because of perhaps disagreements on how these statements are done. So I think it's really important for boards to do that level of clarity or trust with their executives.
Yeah, that's just the pits.
Yeah, no, it's pits. I think another key takeaway is I think VC funds are going to double down on due diligence again. I think that during the boom times, I think the average due diligence time shrank from 5 to 6 months down to 1 to 2 to 3 months for due diligence. So that probably is going to creep up again. Obviously, the due diligence was long also because there weren't a lot of DD providers, a lot of people learning the processes. So there's some efficiency there, but I think it's going to stretch out.
Really is that anybody who wants us to do diligence on them, we can just plug straight into their bank account. And I could just run analytical software on it against what you claim your financial statements is.
The RVC funds is effectively built that bridge in. I won't say the names, but
But
that's part of
it's
it.
hard to get it's hard to get founders to do it.
Oh, it's something that founders tend to agree to because
They're desperate for the money.
they're desperate for the money in Southeast Asia. So I just think that is whether the VC funds wants to invest their limited management fees to create like a finance and engineering audit team effectively, which is not normally what they focus on. They're focusing on value addition rather than audit. Because I mean, from a VC perspective, it's two ways, right? One is at due diligence, which is every 2 years, you do all the due diligence work already. So you already know, supposedly, I'm saying that's good. And then in 2 years' time, you're going to fundraise again. So somebody else is going to do due diligence. So like the intervailing period doesn't feel like a massive risk factor when you should be focused on increasing the value. Until it is. But then do you want to, I'm just giving an example. I made an investment, I deploy my engineering team, and I find out like, oops, there's already fraud, 40%.
Like maybe you can clean it up, right?
Yeah, but then you just write off the investment and just be like, yeah. So I think that structurally there's incentive towards value addition rather than.
That's true.
Yeah.
That's true. It's just janky.
It's janky. And I think it's terrible because we talk about people put money off the table, but normally putting money off the table is because the money goes well and then you take money off the table, which makes sense. And then the company keeps growing. That's why it is. Or maybe the company has a plateau or drops, but because of market factors, because the pandemic happened, because competitor moved in. I think there's all kinds of rational reasons, but I think if I was a growth stage investor from America and I got basically screwed because from my perspective, the prior investors didn't put enough financial controls and governance to make this happen, then I would be like, I don't trust all of these Series A growth stage investors and early stage investors who made representations to me and are on a board with me that this company is okay. Because now if you're saying like, okay, over the past 1 year since the investment, embezzlement or something happened, then that's incumbent on the. But if the due diligence point was done by the growth stage investor and stuff was shenanigans was happening before, then what was the previous investors doing?
Yeah.
You said,
Yeah, I'm sad. I just feel like life is too short to like blow yourself up this way.
yeah,
It's more honorable to blow yourself up. Hey, you tried to do something really hard and it didn't work. Not like you went and committed fraud. It's like,
alleged fraud. Okay, that statement is for all founders who have been confirmed to have done fraud in the past. Like I said, then there's a X percentage chance that these allegations are found to be false, right? So I think that's one. So let's see how that shakes out. But yeah, it's definitely not. It's still confidence breaking. What it reminds me of is what they say about like flight regulations, safety regulations. Like every part of that safety regulation is written in blood
yes.
because some plane had a crash and then they created a new policy, which is like, oh, the door of the cockpit pilot cannot be entered by random passengers because people will try to crash the plane. And then that's one. And then the second thing is, oh, it turns out that pilots who are by themselves may sometimes crash the plane themselves and lock people out of their thing. So now you need to create a policy where there must always be
Another
two people, another person in the plane, so that when the co-pilot steps out, then the stewardess is in there to be there just in case the pilot decides to do something funny. So like every step is like a screw up. So I feel this kind of screw up or this scandal is necessary to get people to be like, oh, the chances of getting caught is higher than I thought, and the reward of doing so is lower than I thought.
If you're an engineer in Canada, you get a ring that's made from the metal of a collapsed bridge in Quebec.
What?
And it's like a reminder of the responsibility of an engineer.
Oh.
What can go wrong if you like don't do your math proper? So we need a VC ring forged in from the metals of bad accounting. I don't know what the equivalent is. We don't have a bridge, but what can we do?
Take all the, I don't know, the audit pay statements and then you, I don't know, recycle them into a, I don't know, paper fan or paper ring. Yeah, I think it's a real problem. And I think everybody has to step up, right? I think VCs have to step up in terms of ensuring the governance, right? And controls. Just to make, because it's just good practice anyway, right? And I think if it's designed properly the way that it's done in the US, it can be actually be relatively lightweight for founders.
I actually think there's obviously fraud in the US as well, right?
Yeah.
But I think part of it is that in the US, let's just real talk, right? The probability of any one startup succeeding is low. This is a high risk sport, right? We're not becoming accountants here.
Yeah.
And so people know that, or eventually they realize that, right? And so they're not playing for one startup. They're playing for repeated shots at startups. And if you think the probability is that your startup's probably going to fail, or it's not going to be like the unicorn, you just want to have more shots on goal. So you can't commit fraud in your first or second attempt because you're going to lose out on shots on goal, right? People don't want to work with you anymore. And so there, I think, is a little bit of a long-term perspective on like, how do I operate in this ecosystem for the length of my career in a way that makes sense?
Yeah.
And Sam Altman is the CEO of OpenAI today, but his first startup was not like a giant success.
Yeah, it was effectively medium.
All right. But that was okay. It's not that everything you do has to be a giant success, but you need to conduct yourself in a way that's, oh, like I treated my investors, I treated my employees well. I tried to deliver a good outcome, even if it wasn't the one we all wanted. I behaved in a way that shows that I'm a good actor in the ecosystem. And like fraud is the opposite of that.
Yeah.
Right. And so we all need to like be on the same page about how to operate an ecosystem to make it better for everyone else. Because if it is all like zero sum and cutthroat and I don't know who's cheating who and whatever, then it doesn't work.
Yeah. And I think that's where the dynamic is that who loses from this entire situation when there's bad accounting, right? And bad faith and bad apples that's there. I think it's just horrible for a lot of people as well. So I think people should just be like, it doesn't just harm my own career, it harms my employees, right? Who will find a new job, my customers who are out, my fish farmers who are going through turmoil. But I think one thing also I think about is that, Shiyan, you sound like such an old person. Because you're like, you think about your length of your career, the whole thing. I think there's a lot of fraud, right? The joke about Forbes 30 under 30 is we had Elizabeth Holmes, who out of college did Theranos in the US. I think there was, the Forbes 30 under 30 lady who sold her fintech startup to JP Morgan and then found out that a lot of the user accounts were fraudulent as well. That's happened in the US as well. But of course, I would say that I feel like their denominator is larger. I would say. I feel like because the US ecosystem is so much more.
Fraud per unit startup, right?
Yeah,
I think we have a higher ratio of fraud per unit startup.
we should calculate this.
Fraud per unit success.
Oh, fraud per unit success is even lower because Southeast Asia is down to how many successes we have? Grab,
See?
GoTo. I think those would be the 3 exits.
Yeah.
We don't have Bukalapak, maybe. Yeah, so 3.5, right?
Yeah, I think that's the thing, right? We just need to like actually, and what I tell everyone is like, starting a company is hard, growing a company is hard. And it's like getting to 1 million of revenue, that's an accomplishment.
Yeah.
Getting from 1 to 10 is actually quite hard.
Yeah.
And then the same 10 to 50 is pretty hard. 50 to 100 is hard, right? Every step, there's like different problems to solve and it's hard. And it's, you shouldn't expect it to be overnight. That's not actually a reasonable expectation. You should expect it to be hard, but that's okay. Because if you're actually if you're making something of value, you're solving someone's real problem, then there is value to be captured, right? And so then it's on you to think about, okay, how do I capture it more effectively, faster, all those things. At the core of it is, am I solving someone's problem in a valuable enough way that they want to pay me for it? And they want to pay me more than it costs me to acquire them, right? Or to serve them. I think this is the flip side, right? Which is like what I want to like have something positive. I don't want this whole episode to be about fraud, right? We're at the beginning of the year and hopefully people have put out like their OKRs or like thought about what their annual plan is. But I think there's this big picture question. Okay, let's say I'm doing 1 million of revenue this year, right? What would it take for my business to be 10 million of revenue? And is there levers in my business that I can try to pull that accelerate that process? And then again, try to picture my business at 25 or 50 million, right? What are the must believes there? Because I think sometimes you fought your way to 1 million of revenue and you're just so tired. You're like, and then you're like grinding and you're like, okay, well, I can see my way to 2 million of revenue. And you're like, okay, then you're like, I doubled, but still actually not that big a company.
Yeah.
And it's not a venture scale type of growth or return. And so really trying to think about where are those step function changes in your business. If you have a little bit of downtime before things get super crazy, I think it's useful for founders to think about those catalysts in their business. And of course, you always need to like have the operating business and the stable ship. But if there are investments you need to make in order to realize these catalysts, think about where you're going to make time to do those things. Because otherwise, you end up with a small business, right? You're like 5 years in and you're like, look, I'm cash flow break even. And you're like, whoopee, this isn't the big outcome that everyone was working for. So I think that's like something that I would encourage people to think about. And it's actually exciting and scary.
Yeah.
Because it might be really scary to think about, oh, actually, we have to go do this really hard thing to truly transform our business in this way. But maybe it's exciting because then you're like, but I think it can be done.
Yeah.
It just requires us to do XYZ thing. That's my attempt at a positive conclusion.
I think that reminded me about one alternate version of events in the multiverse, right? And I think that if eFishery for the last round of Series D had gone for a local listing on the IDX, because there were a couple $100 million valuation, I think their history could be very different. I'm just giving an example, right? Because I think that instead of going for this large, obviously, like with all these sovereign wealth funds from Europe and Malaysia and Singapore coming in, I think that if they had gone for that local listing at a couple $100 million, which is doable as a fish business retail, I think there's a Indian retail investors and they're continue supporting it. I think also it goes back to the fraud triangle, right, that we talked about in the past episode, which is like what incentives, right? And I think the VC type of returns and wanting to show that kind of profile generates that incentive for founders to engineer that using accounting trickery rather than whatever. I feel like if maybe 2 rounds ago somebody has said, go for the local IDX listing, I suspect, I'm not saying it, but the incentives have been there to be tapered off. They could have restructured their financial accounts, right? Material disclosure, clean it up, get it done. Because it is still a significant
Are you
business.
saying that because the VCs were putting growth pressure, there is an incentive to embezzle?
No, I think there's an incentive to report great growth numbers.
Yeah.
And you and I would do great growth numbers by just working our ass off. And if working our ass off doesn't give us good growth numbers, we will just tell our investors and say, sorry, these are shit. And then we just have to eat shit and, I don't know, get fired or whatever it is. But because like you said, we have a long career ahead and it's not worth risking the rest of my career for this whatever. But I think for people who are most founders in Southeast Asia are first-time founders, and they're surrounded by other first-time founders. And from their perspective, if somebody says, oh, this is the way that he has worked for small, medium businesses in terms of accounting wizardry and whatever. So you think it's a common practice and you don't think you'll get caught. I think all those are the ingredients together, right? I'm not asking for VCs to lower their expectations. I don't think that point is. I'm just saying that I think there was a path where around the Series A, I think if they had said, let's go for a local listing, I think they would build the company in a slower way and potentially, avoided this whole situation.
That seems like a very positive spin.
You just asked for a positive way of ending. Okay, wait.
I still want people to build great businesses and the right way, lah.
Of course, you said about overnight success, right?
Yes, there's no overnight.
There's no overnight success, but let us be super real. It was a button that said overnight success, and people could push it, and then everyone was yeah. And then if you say, okay, there's a 50% chance that your career for the rest of your life is over in Southeast Asia, if you press the button, what percentage of people will press the button?
Oh, probably quite high.
Quite high, right? I'm just saying because people don't think they'll get caught. If you think it's a 10% chance of getting caught, you probably hit the button 50%. So I think the whole ecosystem is, I think founders have to wake up to be like, there's a 99% chance you'll get caught if you press this button. And then the reward just drops off, right?
Okay, lah, but maybe I'm just too naive, which is, even if you don't get caught, can you live with that? You walk around every day like you're a fraud.
That's what therapy is for, right?
You're giving therapy a bad name.
No, you take your ill-gotten proceeds and then you use it to, I don't know, get a therapist, become Batman, fight justice, get.
Oh my God. I don't know. I think, yeah, no, this is just human, right? Which is if feels like there's some easy win, yeah, the likelihood is people would take it. But hopefully we can all consider the consequences.
Yeah, because it's not easy, because it's a pain. And it's not a win because you're going to get caught eventually because everyone's sophisticated and it wasn't caught at a Series D level. You've been caught at a Series E or Series F eventually. Yeah, I hope it goes all the way. Now, I think one thing I would say is that I think there are some founders, and I met them actually, who are at the start of this process. There's accounting and there's always some level of treatment of accounting, right? A versus B, right? And maybe they started with B because somebody told them it was the right way, blah, blah, blah. But there's a little bit of a snowball which is like, it compounds, right? Is once then you're stuck in it, and then you feel, if I change it now back to accounting track A. Anyway, I always tell them, it's just like, if you have to eat shit, just eat it now and don't nibble. Just eat it now, because is this going to get worse? Because if you do it now, it's after 1 year or 2 years. But now that you finally understand it, and I am telling you that this is a problem because I can see it because of the way whatever.
But it's also just, if somebody brought this to you, imagine your behavior was being reflected back to you by someone else. Would you be like, oh yeah, I love this shady accounting, you should do more? Is that the advice you would give?
No, but they don't think about it as shady accounting, right? Literally, I worked with one founder, and he was like, yeah, this is a cashback program to whatever it is. But then the net effect was that you are discounting revenues, which should be reflected between gross and net revenues. And now you're moving that cost of revenue of marketing into your sales and marketing expense budget, which is below the line. And then you have this interesting effect, which is actually very common over the past 5 years. I think it's starting to get cleaned up now, but it's been very common in e-commerce platforms where you're like, I spend 20% on revenue and then my revenue goes up like crazy, and then my operating expenditures goes up at the same rate, but it's below, and then people apply a multiple on the revenue without looking at this.
That's why I hate e-com.
Yeah, e-commerce is very common. But what's interesting is the moment you have that accounting treatment, because it has always been done in Southeast Asia, then there's a natural incentive where sales reps and other people are like, let's do more discounts. Let's do more of that program because that's what's working. And that's what I get rewarded for. So to some extent, some structural decisions in accounting can actually spiral because the incentives become out of whack.
You're doing a terrible job of being positive, Jay.
No. Look, it's like fairy tales, right? Today, fairy tales are very nice and whatever it is, but people forget that the point of Little Red Riding Hood
Shit out of people.
is to scare the kid and just be like, there are wolves out there, and you need to keep your eyes on a swivel. And sometimes they pretend to be a grandma. They'll try you, and then you should fight back, and you should run away. And sometimes a woodcutter will come here and help you get justice. But the point of it is that these fairy tales used to be way more gruesome 100 years ago when they existed as folktales, because they were literally stories to warn kids. Anyway, I just can't think we can't like,
Yeah. No, I mean, look, reality is reality. Building businesses is hard.
yeah.
And honesty is the best policy.
Honestly, that's possibility, and I hope that these allegations are false, because that means that it was a giant misunderstanding.
Pretty big misunderstanding.
Yeah, that is a very big misunderstanding, but those things happen. So you asked me to be optimist. I hope it's a giant misunderstanding, right? I seriously do. Then it doesn't have this chilling effect on the Southeast Asia ecosystem and all this other stuff.
Yeah.
It's just that I wouldn't bet. I just have to wait for the facts to come out. I'm waiting for Deal Street Asia to report on this and let us know.
Sounds good.
Good. All right. Peace out. See you next time.
See you next time.
Thank you for listening to Brave. If you enjoyed this episode, please share the podcast with your friends and colleagues. We would also appreciate you leaving a rating or review. Head over to www.bravesea.com for member content, resources, and community. Stay well and stay brave.